All right, there we go. Live on X, coming to you from Discord. Happy Monday, everybody. I am fully recovered, Kishore. Thanks for asking. Absolutely love this community. You guys rock. All right. So let's see here. We still have a few more logistics to take care of before we officially kick this off. So if you're hanging out with us on X, I see some OGs down there. You guys know the deal. Smash that like button, shoot out a retweet. Let's bring some more of the Quai Network ecosystem in here. But if you don't know, we are simulcasting from Discord. So I'm going to drop a link here in a minute, pin it up on this space. This is our developer Q&A. So for all of you building on Quai Network, this is your chance to hop into Discord, engage with the community, ask questions about building on Quai Network. It's been a blast the last few weeks, guys. Just seeing a lot of new builders coming into the ecosystem. Really excited to see what everybody creates. But if you need some help along the way, that's what this space is for. Few minor quirks on Quai Network. You got to innovate somewhere if you want to build the world's first globally scalable decentralized energy dollar. But no fret, no worries. We have a developer Discord server dedicated for you guys and these weekly Q&As where you can hop in and ask us anything and everything about building on Quai Network. Let me see here. Let me ping the team. I know they're heads down right now on Project Soap, which is huge. But let's make sure, just in case they need a reminder, we get either Jonathan, Shakar, or Dr. K in here for you guys. Otherwise, you're going to listen to me ramble about building a dashboard. Still working through those quirks. But if you're not aware, we do live streams every Tuesday and Thursday evening where we build something live. We vibe code live on Quai Network. And it's been a good journey so far. Oh, that's not the link. Wrong link. Sorry, Jonathan. Stand by, folks. All right. Okay. We pinged the man of the hour. Guys, we go super heads down real fast over here. But appreciate y'all hanging in there. While I got you, though, let me know what y'all think of those live streams, if they're helpful. I know I haven't shared the latest repo quite yet. We've been working through some of the data collection issues, really trying to like make it as fast as possible for you guys. I don't want to share something that's like not best practice. So as soon as I nip that one in the bud, we'll get the repo shared out. That way, you guys don't waste any time trying to replicate what we've created. If you're catching up on the live streams, we recently built an upgradable smart contract. So if you're a builder and you're really interested in preparing for Quai Network's first network expansion, if you're not aware, we scale via sharding. But that sharding is dynamic. We don't launch with 9 to 16 shards. We launch with one shard, being a proof of work network. We really want the necessary security that you need to support transactions on every shard. So the network is designed to wait until a sustained TPS or uncle rate before it actually opens up the opportunity for a new shard to be mined. But if you're a builder and you believe in the vision as we do here at Quai Network, you'll want to prepare yourself for when the network shards and creates a net new Oh, I wanted to say namespace. That might not be the right term, but when we get a new shard out there and you want your smart contract to be able to support, uh, external transactions to and from that shard, you'll want an upgradable proxy contract to be able to make those upgrades when that happens. So that's what we built last time on the live streams before we started diving into this dashboard. So I'll drop, I think it's, upgradable smart. It's either smart contract or smart contracts. Let me double check here. Okay, so I'll drop that GitHub repo in there for you guys. This is my preferred pattern for upgradable smart contracts, but we tested this thoroughly on the live stream, so check that out if you're interested in building upgradable smart contracts. Looks like Jonathan's popping in here. Go ahead and shoot him an invite to speak. There we go. We also built a standard ERC20 or a token. I think it's called token debt. Yeah, there's that one. So if anybody's interested in building tokens, check out that GitHub repo. And then we kicked it off with an NFT project. So I'll drop that link in here. It looks like we got Jonathan up. How you doing, Jonathan?
Hey guys, can you hear me?
Yeah, got you loud and clear. Rock and roll. Let me just
Awesome.
get this link in here. All right.
We had a meeting. It went well, but that's why I'm late.
No sweat, man. No sweat. Yeah, that was an important meeting. I hope it went well. Sounds like it did. Super bullish on that, but I won't dive into too many details. So yeah, man, how was your weekend? How you been? What you been working on?
It's been good. I've been working on soap.
Soap.
Yep, we are gonna have more testing this week, and hopefully it's all good. So we're submitting Ravencoin blocks to the testnet.
Nice. That's progress. Yeah. Totally tracking. That's pretty much the priority for all our engineers over here at Quai Network. Super excited for that to roll out. We recently launched, just to catch everybody up, we recently launched a calculator. So you can go and see what the staking could look like in the near future once SOAP launches. So that is at soap.qu.ai. I think we might have some questions about this, so I'm going to drop that link down in there. And then for those of you hanging out with us on X, just a brief reminder, we are actually simulcasting from Discord. So if you have any questions for Jonathan or myself here, hop into the Discord server. The tweet is pinned up above, so you should be able to easily jump in and get your questions asked. We'll make sure we get them answered for you. All right, I'm going to pin a link here as well to the SOAP calculator over there on X, so you guys can check that out. Man, that SOAP calculator is an amazing marketing tool. I was waiting to see what the community created over the weekend. It looks like they're super excited for it. You'll likely see some more content on really that domain writ large being rolled out as SOAP continues to be developed and moves along. So keep your eyes peeled to that domain, folks. Obviously, if you're new around here, definitely give the Quai Network account a follow. We'll be announcing this is going to be a good week for us. We got a few announcements lined up, so looking forward to all that. Rock and roll, guys.
Juicy.
What's that? Sorry.
So the APR and the calculator is looking juicy.
Yeah, it is looking juicy. You know what else I saw? I always forget the name of this domain name, but there's this website that compares tokens by market cap and suggests what the price would be if one token had the market cap of another token. So that's what I like seeing in that calculator is like what could happen to the market cap and the price when that APR gets equilibrated at I think either 20 or 30%. So that's pretty cool to see too. something
Yeah.
to
You're
look
going to see a
forward
lot of
to.
people locking up Quai. I mean, it's going to be at least 100% APR to start. So it's like 100% APR. I mean, that's assuming we're getting, the same hash rate in Ravencoin. Like it's probably going to just move over. So if it just, if our prog pow hash rate moves over to Ravencoin when we launch this, like, you're going to get 100% APR on your Quai. It's going to be pretty cool.
Boom. Boom. Heck yeah, man. Changing the game. It is definitely a time to be in proof of work. A lot of stuff happening in this space, and proud to be kind of leading the pack over here at Quai Network. So, last call, folks, before we dive in, feel free to pop into Discord and ask your questions. We definitely want to make sure you guys have everything you need to continue building on Quai. We got a few coming in. You ready to kick it off, Jonathan?
Yeah, let's do it. 100%.
Let's go. All right. Starting with one from A Particle, brought to us by Keyshore. How would G privacy compare to, for example, Zcash privacy if Zcash was private by default? For example, there's a coin called Pirate Chain, ARRR. Pirate Chain. Their token symbol is ARRR. Anyways, it has yeah, it has Zcash privacy, but it's enforced by default. R is not using unshielded addresses at all. Okay, so kind of
Yeah,
like
Power Chain
a
is pretty cool. I think last cycle they got to like $1 billion valuation or something market cap. I mean, $1 billion market cap at some point. I don't know what it's at now, but yeah, last cycle that went crazy. That coin. Yeah, Power Chain does have Zcash kind of or zk snark kind of privacy, which is pretty cool. I wish it was used more. Like Monero is used all the time by people who prefer privacy. I think Pirate Chain is a pretty cool project as well. So I would say Chi is more similar to Monero than it is to Zcash in the sense that you can shield your money, and actually Monero is also private by default. So Chi is private by default as well, but there's ways of making it a lot more private using CoinJoin, which is like signing Schnorr signatures along with other people, like kind of like Whirlpool or Samurai Wallet. I think I've talked about that at length before. But basically, when you sign transactions along with other people, you're creating a sort of Monero-like ring signature with a lot of mix-ins. So you create something. It's not exactly a ring signature, but it looks kind of like it in terms of how private it is and how difficult it is to trace and to understand whose input is whose. And so, I mean, it's kind of more like Monero in that sense. It is not like Zcash at all, I don't think. Not to my knowledge. We don't use ZK snarks, but that makes it a lot more scalable. ZK snarks are not very scalable. If we're talking about thousands of TPS right now, they're just not scalable enough. They're not fast enough to create, and they're not fast enough to verify. So that's why we've chosen that path versus the Zcash path. But I mean, there is an argument to be made for Zcash. Obviously, the technology is very cool. If you're able to scale the tech, it would require some breakthroughs in cryptography. But if you are able to get to that point, that it's also great. I don't. I don't have like a preference over one or the other. I think Zcash having optional privacy is kind of a downside. So I'd rather use a system that's fully private. So Monero is a good example of something I would like. I think Pirate Chain is cool too. But if you're trying to compare Chi to Pirate Chain, I mean, they're just different techs. So they're both great at what they do, and they both achieve privacy.
boom. Man, I say that too much. Yeah, man. Appreciate the question, A Particle One. Last week, they asked for a document on cheese privacy. That is in draft, in a PR, submitted as we speak. It's waiting for Dr. K's final approval. So you'll be able to see a little more detail on the differences there and why we chose, the design that we chose. Personally, I think if you can't scale privacy tech, it's not that useful. So to Jonathan's point, if they're able to scale it, great. Otherwise, Chi is effectively private by default like Monero. Rock on. Rock on. Yeah, I bumped into the Pirate Chain folks over at Porkfest in New Hampshire as well. Cool guys. They were super interested in what we were building. But you know what? Like I got some R just by hanging out with them, but my Edge wallet refuses to sync for some reason. So I've never actually seen how much they sent me. Ah,
Oh, your wallet's not working. That's too bad.
yeah.
That's
Yeah,
the problem with complicated technology.
right. Well, and I wasn't the only one. Like he was handing out a lot of R. Gosh dang it, for the life of me, I forget the gentleman's name. Really cool guy. Also, highly encourage us to go to Monerotopia next year. But yeah, nobody's Edge wallet was syncing on Pirate Chain for some reason. It looks like it's still not syncing. Dang. All right. Let's see here. Just some side comments. Everybody's super excited for Tuesday's space. People are commenting on the AWS outage, which is all over crypto Twitter right now.
Oh, is AWS still not working?
I have not verified. I have not verified, but when
I know it was not
RPCs,
working overnight, but yeah.
yeah, when RPCs go down, I mean, people can say that their chains are up, but if the dApps aren't working, is it usable? That's kind of my question there.
Can run all the RPCs on AWS, I guess.
Right?
I run mine out at home, so I mean, I guess I could lose, the internet, or I could lose power, to be clear, but I'm not. Nobody's immune to that. But I mean, it's better to run your own stuff, I think.
Yeah, no, nobody is immune to it. I'm just, excited to see more people start building on Quai and kind of leveraging some of the primitives we have, like Nepo Pals. I know you recently released something for, verifying proofs in the browser. Is that correct?
Yep. It actually will need to be modified to support Kapow because it's for ProgPow, but it's a kind of minimal change. I just need to rebuild it. But yeah, you can verify ProgPow proofs in JavaScript using WebAssembly. To do Kapow, I just need to change it a little bit and rebuild it.
Nice. Halfway there, folks. Huge opportunity for anybody interested in decentralized, trustless RPCs. Yeah, a lot left to build over there, but sounds like we're making progress. I'm super excited for it. One of the big things that pilled me actually was talking to Dr. K about trustless RPCs. It's huge. Rock on.
It is big. Yeah, we need more of that for sure.
Yeah. I've been running Node for a while. I even got like the fully synced indexed Node. So as soon as I can make that more useful to the community, I absolutely will. But moving right along here, we got another one coming in from North Logic. Great question. Thanks again, Kishore, for bringing this up. They've said, I've done a bit of reading on game theory, so I'm completely off the field. Since the way I understood it was an ideal setting, SOAP is non-cooperative game in Nash equilibrium? Question mark. Oh man, I read that terribly. Did that make sense to you, Jonathan?
I'd have to look at the definition exactly. I don't think it's non-cooperative. I mean, it seems cooperative to me because it's. I mean, it certainly is a Nash equilibrium. It's not like we are, you know, fighting against these chains. We are simply securing them with hash rate that might switch over. It might be outside hash rate. Miners are cooperative. They have to be for the protocol to work. But everything is in a Nash equilibrium for sure. That just means that everything is stable, everything works, and there's nothing that would. There's no like malincentives that make parties want to attack the chain or something like that.
Right. Okay. Okay. Dang, North Logic. Love to see it. Love to see it. I too need to do some reading up on game theory. I snagged a book during the last office move, but haven't found the time. I might just tap AI on the shoulder and ask it to make sense of it for me. I wonder if anybody's asked our AI bot that question. That might be a good one for the AI bot. Rock on. All right, we got some calculator questions here. This might be a little over my head, but I'm going to pull it up on the side so I can like work through this with the community here. The first question is, what exactly goes into the implied Quai price that the calculator shows? Is it only based on the daily USD buyback amount and the percentage of Quai staked? Or does it also factor in market conditions like liquidity and trading activity? So, actually, you might not have seen this because I didn't see it at first. But that implied Quai price, the formula is actually shown down below. So let me see if I can just share this real quick for you guys. Share your screen. Okay. My Mac's permissions are all jacked up for some reason. Stand by, folks.
I think the implied Quai price is basically just saying, at some Quai price, we're going to 100% APR. And if you want the APR to go down to something more reasonable, because if people see 100% APR, they're going to want to participate, right? So what the market will tend to do is to participate, and in order to participate, obviously you have to buy Quai, right? So what we're saying is, in order for the APR to go down to something more reasonable, like 20%, people would have to buy Quai and they would have to stake it. And then that's, we kind of have a calculation of what price would Quai be for the APR to be a little bit more reasonable. And that, is, you can play around with different numbers. I think for 20%, let's see, I'm using a calculator right now. So 20% APR, if we just start with 15K and 20% lock Quai, it's a 22-cent Quai. That's like the implied price, because that's what the price would have to go to for the APR to go down from 100% to 20%. So, it could stay at 100%. That just means that there's more opportunity for people who don't know about it yet, which is like marketing. But what likely will happen is you'll just see people want to participate. So they'll buy Quai, they'll stake it, and the APR will just slowly go down until Quai is at the price that the calculator says it should be, the implied price, and the APR is at 20%. So it's not like a perfect tool, and the price is going to swing day to day, obviously. So it's, it kind of just depends on a lot of factors, which is, the point of the calculator is not to do away with all those factors. The point is just to distill, what is it going to look like when we're at 20% APR? This is what it should look like. Okay.
Yeah. No, good call out, Jonathan. Keyshores was wondering if trading activity is also considered. I'll just state simply, it's not a simulator. It's more of a calculator. And there are a few assumptions baked in. You should be able to see all of those on the global parameters side of the page there. And then they break down all the variables on the right. And then you can see how that.
Yeah, an important assumption is that there's no burning involved as well. So this is entirely, all of the buybacks go to stakers, which is what we might start with. I mean, I'm not entirely sure yet, but like if we do all of the buybacks into staking, this is what it would look like. There's no burning in this calculator.
Right. Yeah. Yep. That solves the next question as well. Does calculator assume buybacks stay constant over time? I think the answer is yes. It's 100% buybacks in that calculator.
Yep.
Nice. All right. Will simulator consider trading activity as well? I don't think that's planned currently. This was just, a super simple calculator to help folks wrap their mind around, the potential impacts. But we'll see, maybe, potentially. But that's why, Kishore, I say it's not a simulator. It's a simple calculator. Hopefully that makes more sense. Rock on. All right, next one up here. How is the APR derived? Is it calculated purely from a buyback flow relative to staked Quai, or does it include any network fees, emissions, or other rewards?
Purely the buybacks.
Yeah, that's what I was assuming. Purely buyback flow related to the staked Quai. That's an easy one. All right. How does staking percentage affect APR and implied price once buybacks, TVL, and price feedback are considered?
When the
Uh,
percentage of stake Quai goes up, the APR goes down. And when the percentage of stake Quai goes down, the APR goes up.
right. Yeah, that's pretty simple. I was getting confused by the input mode over here. Okay, rock on. Let's see here. Yep. Hey, A particle. Working on that draft for you. Hope to have that out ASAP. Rock on. All right, moving right along. If a higher portion of purchase quiet is burned instead of distributed, does that raise the implied price at the expense of yield? Does that raise the implied price? I think that just impacts.
I mean, we're more net positive in that case. You could say that it positively impacts the price. You could say that.
Yeah.
It does do it at the expense of yields for sure, because that's buybacks that are not going to stakers. So that's just burns. So yeah, it certainly is a positive action at the expense of yield. Yes.
Boom. How is circulating supply defined? Circulating supply is actually coming from the RPC, I believe. Do you remember the URL?
The circulating supply is how many tokens people have at the moment
Right,
in the wallets.
right. I think there's an API endpoint for that. Am I mistaken, Jonathan?
Yep, there is. Yeah.
Do you remember what that URL is?
RPC.network/supply.
Boom. There you go.
It automatically updates anytime coins are minted, and anytime coins are unlocked. It automatically updates.
Boom. Okay. That's what I assumed. Rock on. Rock on.
It also includes all of the stake or all of the airdrops and everything. I mean, some of the tokens are locked in a contract, but those are considered unlocked for the purposes of the circulating supply number.
Oh, good call out. Good call out. Rock on. So that follow-up question there doesn't include time-locked emissions, unclaimed rewards, or only freely circulating tokens. So it sounds like it definitely includes all those time-locked. It includes the time-locked. Does it include time-locked emissions?
No, emissions that are locked are not in the supply, so it does not include emissions that are locked. It only includes those when they are unlocked and minted. They technically are not minted until they unlock, I believe.
Got it. Okay, good to know. Rock on. So yes, does include unclaimed rewards. Does not include time-locked emissions. Rock on.
Yeah, that's right. Any rewards that are in a contract on chain are considered circulating by the number.
Cool beans. Cool beans. Great questions, Kishore. Next one here. How does SOAP handle price volatility in parent chains? BCH, LTC, Doge. Since those rewards fund.
There's no handling involved. We mine tokens, we sell tokens. Ideally, we sell them as soon as we get it, though. We don't have to deal with volatility, but that's not always possible because there's a Coinbase maturity period. So even I don't know if you guys know this actually, even Bitcoin Cash, every single blockchain, including Ravencoin, has a lock on the Coinbase, just like we do. But ours is 2 weeks. Theirs is like a day, I think. But every protocol does have a lock. So it's usually about a day.
Got it. Rock on.
Actually, for Ravencoin, it's just a few hours.
Oh, interesting. That I didn't know. Now, like one thing I want to call it, because we have mentioned it in the past, and Dr. K said it a few times, that there is going to be what I would call like a management layer in between like the earning and the actual buying, the buyback. I believe we're going with a market maker to help distribute those buybacks and time them appropriately.
Yep, that's right.
Rock on. All right. Okay. I mean, that leads right into Next question: are buybacks market executed or time weighted average based? Price.
TWAP, I think.
Yeah, I believe, the idea is they will be TWAP based. Again, leveraging that management layer via market maker. Do you know differently, Jonathan?
No, this is going to be TWAP based.
Nice. All right. What's the on-chain routing logic for parent chain rewards? I think it's the same logic as
It's
the blockchain, right?
Parent chain rewards don't exist on our blockchain. They exist on the parent chain. So I'm not really sure what that question is asking.
Yeah. Yeah. So to be clear, SOAP miners will be submitting headers with a Quai Foundation address, and then their Quai address will be earning Quai, and then the parent chain that they're mining, those rewards will go to the Quai Foundation. So on the two chains that they're mining, they're earning Quai on Quai, and then say it's Ravencoin, the Ravencoin they earn will be going to the foundation's address.
Yep.
Rock on. Are protocol controlled addresses trustless and verifiable on chain? I would say they're about as trustless and verifiable as the chains, be it Ravencoin, Bitcoin Cash, Litecoin, Doge, etc. Not.
I mean, they're controlled by the foundation. So I think they're actually going to be exchange addresses, not even just like a wallet. Pretty sure it's just going to be an exchange deposit address. So, they're not trustless because the exchange owns them.
Okay, good point. All right. Okay, so following up on the game theory question, Kishore proposes non-cooperative from the donor chain's perspective, maybe? Does that make more sense? No, I think it is still cooperative, right?
We're cooperatively mining.
Yeah, it's cooperative mining. It's not selfish mining, that's for sure.
Yeah.
Okay. Okay. Man, great questions, guys. I see more folks tuning in here on X. Just a FYI, we are simulcasting from Discord. So if you have any questions for Jonathan here, hop into our Discord server. The link is pinned in the tweets up above. Otherwise, drop your questions in the comments. I'll pull them up here towards the end if we get any good ones. But come hang out with us in Discord. The chat's always a good time. All right, moving right along here. Kishore is asking, how does the burn reward split get determined? Fixed ratio or dynamic tuned based on market conditions or governance input? I don't think we've actually answered this question yet. Are you aware?
Yeah, I mean, it's up to the foundation. We're eventually going to move it to like a DAO, I think. But I mean, right now that's up to the foundation. And they're going to make a decision that they think is best for the protocol. So that's just the answer.
Got it. Yep. TBD, Kishore, TBD.
However, I would expect most of the emissions to go to staking. I would expect most for sure, because I think that's going to give us a better flywheel, and I think I understand that. I don't think we're going to have any problems there, but I would just generally expect most of the emissions to go to staking as long as it's set up and as long as there are enough people staking. If you only have 1 million Quai in the staking contract, then yeah, it's going to go to burns mostly. But if you have 100 million Quai, then it's going to go mostly to the staking contract.
That makes sense.
I mean, that's basically right. If you have 100 million Quai in the contract, that's basically the community is voting. I want rewards to go to staking because they're putting tokens in it. So that's where it's going to go.
There you go. Yeah, no, that makes sense. I have similar assumptions, Jonathan. Probably mostly staking out the gate, if not all.
Yeah, I mean, again, it depends on how many people are staking. If people want to vote with their tokens and lock them up in the staking contract, I mean, that's a vote of confidence for staking. That's where the rewards are going to go.
Easy enough.
But you got to put your money where your mouth is, right? If you're not going to vote and put your tokens in the staking contract, then like they're not. I mean, you're not going to get rewards in there. Like that's just how I think it should go.
Boom. All right. Next question here. Could external chain subsidies eventually surpass Quai's own emission? Ooh, that's an interesting question. External change subsidies eventually surpass Quai's.
Yeah,
I mean, in a way, they are right
certainly
now,
possible.
right?
That would mean that it's less profitable to mine Quai than it is other chains. But I mean, it's certainly possible that could happen. I would say basically at that point, what you would have is miners choosing to mine Quai over other chains because they believe in it, not because it's more profitable. Which is a great vote of confidence for us. I think that will eventually happen. Additionally, if you expect the token to keep going up, right, as a miner, you want to mine the token. Because basically, if you expect it to go up in 2 weeks, you can mine it now and then get it in 2 weeks. And if it's a higher value, you've just profited. And so if we come to a point where, the token is going up steadily over a long period of time and miners, acknowledge that and they expect that to continue, you would actually see Quai being less profitable than other chains, I think, because the profitability calculation is instantaneous. It does not forward looking. So you would have miners, yeah, you would probably have other chains, being the subsidy being greater than Quai, meaning Quai is less profitable, but that obviously is because it becomes profitable when the price goes up.
Right. Oh man, that just got me thinking. So, Kishro's got a follow up to that. Wouldn't that make Quai one of the few deflationary proof of work systems funded externally? I think it would make it the only one. I completely forgot that Bitcoin miners are unprofitable for long periods of time as well. So, I would
Right.
say
And that's
yes.
another thing about Bitcoin is that profitability calculators are not forward looking. Bitcoin miners are forward looking. They always expect the halving to increase the price. So they mine before the halving, and so far it has worked. So in our case, it would be kind of similar, although we don't have, I mean, we do have a protocol baked halving, but it's not really going to take into effect anytime soon. So we have, well, we have one coming up this month, but we're going to change the schedule of it just because SOAP has changed the economics completely. So it wouldn't be based on a halving schedule. It would be based on their expectations for the buybacks influencing the price, kind of. So they would probably pay a lot of attention to the buybacks, and as they see the buybacks increasing, they would choose to mine it with the expectation of the price going up when their coins unlock in 2 weeks.
There you go.
But yeah, we'd be the only one. I mean, I don't know of any other one that does this. I mean, we've talked to a lot of different VCs about it, and they're all like, "Yeah, like we never heard about this anymore, or we never heard about this before, and like this is like wild." So
Yeah. Yeah, no, definitely make probably Quai the only deflationary proof of work system funded externally. Interesting. Rock and roll. Okay, next one here. At what scale does SOAP create meaningful deflationary pressure? Some might say immediately, but what do you think, Jonathan?
yeah, I think immediately. I mean, all you need is some miners to mine it, with the expectation of it going up, and then not sell it immediately, and that's deflation.
Boom. Easy one. All right. Last one in this group here is the APR sustainable beyond initial adoption, unless the buy volume increases proportionally, maybe.
Yeah, it's kind of a flywheel. That's how I think about it. So when you have people buying Quai to stake it because there's a good APR, the APR goes down, right?
Yeah.
But what happens is the price increase makes more miners want to switch, right? Because Quai is now more profitable than whatever they're mining. When they switch, the hash rate goes up. That means the security budget goes up, but also it means the buybacks increase because we're getting more blocks from subsidy chains, we're getting more block rewards, and that means the buybacks increase. When the buybacks increase, the APR goes back up. So it is kind of like a flywheel. The APR goes back up, the price goes back up, like there's more hash rate. We do have to jumpstart it, like jumpstarting a motor. You have to like pull the lever a few times, depending on what kind of motor you're using. But once the motor starts running, it's gonna run. It's just gonna take some effort to start it.
Right. Right. No, that's an interesting question. Because there's a lot of variables going into that. But when I think of APR, like it's literally like the amount, kind of going into compared to the amount staked, right? So that APR is dynamic. Um, expect it to change.
Yeah, it is dynamic.
Nice. All right, man. Did we run out of questions? Oh, that's a first. Oh, I spoke too soon. Okay. Love the questions, Kishore. I live for them every Monday and Wednesday. The questions are amazing. Okay. Running up here as rewards compound automatically, or are rewards compounded automatically, or do users have to claim and restake manually? Oh, interesting question.
I believe the way it works is at the end of the lock period, you have some amount of time to withdraw. And if you don't withdraw in that amount of time, it's like a day or two. If you don't withdraw within that amount of time, the compounding is automatic and it'll lock your funds again for another 30 days or whatever the window is.
Mm-hmm.
So you do have to be on top of it and make sure you do withdraw it because, yeah, it will automatically compound your stake.
Oh, interesting. Nice. Well, that's both a benefit, but may require a little additional management on the user's behalf. But I think they'll end up liking that. Rock on. How does the 30-day reward delay interact with APR calculations? Does it front load rewards, or is the APR projected based on total stake? Total staked.
The APR is just based on the total stake. It doesn't have anything to do with the amount of time it's staked for.
Yeah, so the APR is a percentage as well.
Yeah, it's a percentage of the total stake. Yeah.
Yeah, I keep thinking about this in terms of like rewards and Quai, but it's a percentage. Okay. Next one here. How is the Quai Rapchi pool balanced initially, and how does the protocol handle slippage and price oracles? Interesting. So I think
It's free market. I mean, it's not. There's no balancing mechanism. It's purely free market. So people buy it, and I assume they convert it after they buy it. But they buy it to do whatever they want with it. I mean, the price of the pool is just free market. It's whatever participants think the price should be.
got it. Got it. And quick question, Jonathan. I believe like if you want to know about the pool currently, it's up on Quai Swap, is it not?
Yeah, yeah. I mean, you can go buy Rapchi with your Quai right now if you want to. The price may be different than the protocol exchange rate price because there's always going to be a difference between what the market wants to pay and what the protocol pays. Arbitrageurs profit off of the difference, but there's, the protocol has a lot of limits. They have like slippage requirements. The protocol has like minimums, maximums, all this shit. So it's a lot more restrictive. So I think the exchange rate in the pool is always going to be different.
Right.
But the easiest way to obtain Rapchi is to buy it in the pool.
Right. Okay. Okay. Yeah. So if you're interested in that pool as it currently stands, you can go check it out over at Quai Swap. Rock on. All right. Next one here. What protections exist for impermanent loss, especially during the first few days of extremely high APRs?
Well, that's a fair question. I mean, when you're staking Quai, there is no permanent loss, to be clear. You're just putting Quai in a pool. It doesn't change in value. I mean, the USD price of Quai changes, obviously, but like the amount of Quai you have to stake in the pool is constant. If you're talking about LP staking, that's a little more advanced. I don't think we're going to launch that initially, but there is impermanent loss if you deposit in that pool. And as a result, I expect the APRs for LP staking to be higher. And that's because you are taking on a risk of impermanent loss when you deposit in that pool. There's no way around that. That's just how providing liquidity works. Sometimes you're going to get more of one token than the other when you withdraw. And that's part of the game, but the APR should make up for any impermanent loss because it's probably going to be like 100% or something. Like, you're probably not going to lose 100% of your money. So the 100% APR should make up for any impermanent loss. But I don't know what it's going to be. So I can't guarantee anything. And I will say, like, anytime you deposit in an LP pool, you are helping the protocol, like, by a lot, doing that. And that's awesome. And you are getting paid appropriately for it. But there is always the risk of impermanent loss.
Right.
But yeah, when you stake Quai, you're not at risk at all. That's LP. It's liquidity provision is different. That's when you take USDT and Quai and you put it in a pool and you get LP tokens to represent that position in the pool, and then you stake those tokens. That's a more advanced thing.
Okay. Okay. Yeah, thanks for walking through that with us, Jonathan. Next one here, I'm a little confused about, but maybe this makes sense to you. How does the burn mechanism integrate with staking rewards? Is it proportional to staked wrap chi slash Quai or total pool size? Again, when it comes to
Um,
burning versus buybacks, I don't think we have any information on that currently. But
yeah,
maybe,
again, like I would expect the majority of rewards to be buyback and staking. I don't think we're going to burn a lot of the rewards unless the staking contract isn't being utilized to the fullest extent, which again is up to the foundation. And so I can't really answer it because I don't really know how they're going to determine what's going to be burned and what's going to be staked. Um, It is not proportional to staked wrapped chi. It is related to staked quai, but not chi.
got it. Okay. All right. Yeah, TBD folks on the burn versus buybacks. Expect most of the rewards to go to buybacks out the gate. Um, but unclear at this time on the percentage there. Rock on. All right, next one here. Are the staking contracts upgradable or is there a fixed deployment to ensure security? Oh, great question. Yeah,
Good question. I'm not sure how we're going to organize it. We might just not make them upgradable. Probably for the best not to do that. So probably not going to do that, but like, I can't guarantee that because we haven't deployed them yet.
right, right. Personal question here, Jonathan. We're confirm this. My assumption is we're also looking at getting these audited. Is that correct?
That's correct.
Nice. All right, guys. Trying to do right by you guys over here. Great questions, though. Great questions. Next one here. How will the protocol handle sudden influxes of liquidity that drastically drop APRs? Any smoothing mechanisms?
No, that's just how it is. Like APRs are variable. They could go up, they can go down. It just depends on how much quai is staked. I do expect there to be very high APRs in the beginning, and I expect them to go down over time. But again, if there's a large influx of liquidity, I mean, you're basically saying people are buying Quai, which is good. So even if you're staking and your APR goes down, well, guess what? The price of Quai went up. So I mean, it's the same thing. You're
Right.
just getting that increase in Quai price. I mean, that's like an impermanent gain. I guess you can think of it like a gain you haven't capitalized on yet, but it's still a gain, right? So large influxes of liquidity that reduce APR, I think, is beneficial to stakers.
Yep. Yep. Rock on. Next one here, kind of along those same lines. What happens if a VC or whale injects large liquidity at the start? Does it drastically reduce APR for regular users? I want to say it reduces APR for everybody, even that
Yeah,
VC or whale.
yeah, it reduces APR for everybody. But again, you can use the calculator to see if we have 15K buybacks a day, which is what we expect to start with. You can type in numbers and you can see exactly what happens when the amount of stake quai increases. The APR goes down. I mean, it doesn't go to zero by any means, but it will go down until we get more buybacks or until the price, goes up. Like it just depends.
All right. All right. Great questions. Can staking contracts interact with other DeFi protocols in the future, or are they siloed? I expect them to be siloed, but
Actually, I wanted to touch on something the last question
sure.
kind of alluded to. So VCs are whales, right? I mean, if you go to this calculator right now and you say 20% of Quai is stake, that's 123 million Quai. I'm not actually sure if anybody has that much Quai right now. I mean, I understand the circulating is 600 million or whatever, but most of the circulating supply is actually not held by people who can transfer it. And I'm talking about the foundation, and some of it is held by like a marketing or a market maker. Some of it's held by like an exchange. Some of it is held by the foundation. I mean, there's various parts of the circulating supply that are not held by people. So when you're saying like what happens if a VC or whale injects a lot of money and all that, the amount that they can inject is going to be far less than 100 million Quai. It just is, because there is no, like, as far as I know, and I'm a part of the team, so I know like a fair amount. I'm not like an oracle, and I don't know what everybody holds, obviously, but I can say like 100 million Quai is a lot. It's everything on the exchanges. There are VCs that have some Quai, but they do not have 100 million Quai. So just to be clear, like I really don't think that's going to be a huge problem in the beginning. It could get there if you have large players start really like buying up a lot of the Quai, but I don't think we're gonna have that problem in the beginning. So just wanted to note that. Anyways, go on to the next question. Sorry.
No. Great call out. Great call out. Take a hard look at that calculator, folks. All the information should be there. It's
yeah, like to halve the APR, you need another 100 million Quai, right? And I just don't think that like there's a party that can come in with an extra 100 million Quai right now. I don't see that happening.
right. Right. And all of it begets positive price action. So super bullish on all this stuff. Great.
I mean, yeah, they'd have to buy it, right? It's complicated, but yeah, I mean, I don't right now. There's no that party that has that much unlocked.
Right. No, good call out. Okay, cool. The next one there then was talking about staking contracts interacting with other DeFi protocols in the future, or do we expect these contracts to be siloed?
Yeah, they can interact with other DeFi protocols. I mean, you could even make an NFT on locked staking positions if you really wanted to. I mean, they're only locked for like a month or two. Like, I don't think you really need to do that, but like, if you really wanted to, you could do that. They can interact with other protocols. They're just Solidity contracts, right? So yeah. Solidity is interoperable or whatever.
Yeah. Well, I was gonna say, even
composable is the word.
There you
Solidity contracts are composable.
There you go. I was going to say, even if the foundation doesn't take action, other folks could build some things that interact with it, I expect. Rock on.
Yeah, you could build a bunch of stuff that interacts with it. I don't really see like a real point, I guess, but you could.
Yeah, maybe. You know me, man. I like NFTs. You know, give me an NFT for anything. I'll probably take it.
Yeah.
Cool. All right. Let's see your last one in this stack. How does the quorum signed aux template work in practice? Who forms a quorum, and how is it distributed to miners?
Yeah, the block template is constructed by like a subset of nodes that the foundation runs. Again, the foundation has control over the block rewards, the subsidy block rewards, and so they sign the block templates with their exchange addresses. I mean, it sounds like a centralized process. It kind of is right now to begin with. We're going to make it more decentralized as time goes on. But the most important thing you should know about this is that it does not affect the protocol or consensus in any way. All it does is allow miners to mine on these templates that basically make Quai go up in value, right? Like it's a cooperative game, right, between the miners and the protocol. The miners want the price to go up because it makes their 2-week lockup more profitable. So they're going to do this, but they aren't required to. And because they aren't required to, if the foundation ever became malicious or withheld rewards or whatever, the miners would simply stop mining on their block templates. The foundation wouldn't get any more money, and the chain would go on. If the foundation goes down, if it gets co-opted by the government or whatever happens, like it will never affect the stability of the protocol itself, because it is unrelated. It is built on top of the protocol rather than required for consensus.
Hey guys, so, real quick here, if I may. This has nothing to do with Quai itself in terms of like the protocol. The committee templates only affect the centralization of the subsidy pool. So like the template that you're templating is a Bitcoin template. So all Bitcoin mining or Bitcoin Cash or Dogecoin mining is done through a pool.
Yep.
So like this is a new pool for the subsidy chain, and pools are a centralized process. So yes, it's as centralized as any other pool on one of these chains. But from the perspective of Quai, it has no centralizing influence on Quai.
Thank you, Dr. K. Yep, that's right.
Nope. Easy enough. Rock on, guys. Glad to have you, Dr. K. Thanks for joining. I'm going to move on to this next question here, and then I'm going to peek back over on X. Guys, if you're hanging out with us on X, we are simulcasting from Discord, so check that link in the pinned tweet up above and hop in. Running low on time here, but don't miss the next one. This next question is from Keyshore. Could SOAP eventually allow tokenized representations of hash rate, e.g. SOAP shares or synthetic yield tokens, to trade in secondary markets?
Interesting question.
Yeah.
Tokenized representations of hash rate.
SOAP shares or synthetic yield tokens trade in secondary markets. Oh shit.
Dr. K, you're kind of echoing there, I think.
Yeah, tokenized representation of hash rate.
I think he's a few seconds behind us. I'm actually not sure. I think you could in theory.
Sorry.
Tokenized
representations of hash rate, guys. Tokenized representations of hash rate are chi.
Yeah, that's true. Yeah.
Like straight up. Right. Now, I will say the interesting thing to explore here that like hasn't been explored but exists is the fact that we're going to have referencing into these other chains. So if you want to like think about something that's interesting that's coming out of it that we don't currently have, is this creates the backbone to make a decentralized bridge between any of these chains and Quai.
Yeah, you're right. I was actually thinking about that. That's true. The problem is these chains are like ghost chains, so like bridging to them doesn't help. I guess you could bridge Bitcoin into Quai, which is interesting.
Yep. That's exactly what you would do.
Yeah.
So like they're ghost chains from the point of transactions. They're not ghost chains in terms of capital. So like you would get the money to flow onto Quai via that bridge.
Yeah, that's true. But it technically would be a foundation wrapped BTC, right?
I don't think you no. I mean, you're relying on the foundation to continue to create templates.
I'm going to think about it for sure. I mean, it's certainly interesting.
Yeah, I mean, it's right. So like, they wouldn't control it. They just have to continue to make templates. As like long as they continue to make templates, like it continues to work, right? But that's like the only thing that you're depending on.
I mean, bridging back could be complicated because I think to bridge back you need some kind of multi-sig, right?
So I haven't fully explored it, but I'm pretty sure that you could do some version of a time lock. If you look at how whatchamacallit's doing it.
Even the merge mined Bitcoin side chains, they all use multi-sig.
No. So David Say's thing doesn't. What's his thing again?
I don't know. I know there's a rootstock.
No. David Say's thing. Is it Core or something?
Am I Liquid? The Liquid sidechain? I don't know who David Say is, to be honest.
Prof out of Stanford. Let me see here. It's I'm pretty sure Babylon. We got it. Didn't even have to Google it.
Babylon Bridge. I don't think they built a bridge yet, did they?
No. So we finally actually found like their tech guy to ask them this at the Science of Blockchain conference. They use a process of like overlapping signatures to like do this. but it's like a legitimate process. I'm trying to remember. I'm sure if I ask Ricard, he'll be able to spur me. But basically, when you make a EC DSA signature, if you make the same like two signatures on the same nonce, you end up.
Yeah.
Do you remember this? Right.
Yeah,
So like you end up revealing your key basically. So they basically force you to like do something that if you do something bad, you like reveal your key. I'm trying to remember the full construction of it, but Babylon actually does this in a way that like kind of makes sense. Yeah, it's an interactive process, but it doesn't require a federation.
It's an extractable one-time signature.
Is that what it's called?
Yeah, it's interesting. It uses this kind of bug in ECDSA to prevent you from double signing. Yeah, I also have to look into it more, but I did learn about this in Science of Blockchain. I remember learning about this. I remember them talking about BitVM and stuff like this, and this is like the first way for you to use a bridge. Yeah, I need to look into it more to see exactly how it works, but that's true. This does exist, yeah.
There is a way to do this, I guess is the point. I don't recall the specifics right off the top of my head. I do know that it was exploiting, like, you can't sign two signatures with the same nonce.
I think it was using Bitcoin to stake. So like you could basically use Bitcoin as a validator, like staking as a validator on a proof of stake chain. And so basically if you were ever to double sign with your Bitcoin, like you're basically revealing your private key. I'm pretty sure that's what it was.
That's what it was.
Yeah. So I don't know if it was for a bridge per se, but it was certainly for like a staking mechanism, like proof of stake.
Right.
Interesting.
It's like a slashing mechanism.
Interesting.
But yeah, I mean, the ability to have these merge mine templates and merge mine blocks in Quai and Bitcoin and stuff, like you could make a bridge. There's a way to do it. We'd have to learn or think about the design.
Yeah.
Well, so there's like a couple things that you need, right? You need the referencing, I guess, is the piece that you're getting here. So you need to know kind of like the state of Bitcoin and the state of Quai. That's like the first piece that you need for a bridge. And then the second piece is you need to be able to like lock and unlock. Now, there certainly is a set of interactive processes that would allow people to do atomic swaps across the two. The hard part is there a way to lock something in Bitcoin and then unlock it based off a proof in Quai? That's like the thing you got to figure out.
Yeah, now you're kind of getting into BitVM territory there, I think.
Yeah, you might be. Yeah. Anyway, like I said, it's just an interesting thing that is downstream of this. We haven't fully thought through it, but there potentially is like a nice little construction here that you might be able to put together.
Yeah.
Nice.
Yeah, I mean, if the BitVM guys get any progress, like you could definitely make use of it, and I think they are making some progress. So eventually, it's expensive right now, but eventually, I think you'd be able to do something like this. So, yeah, it's cool stuff. We need another opcode in Bitcoin too. I think they're op dupe or something shit like that. Like the thing is in Bitcoin, like they have a very, very, very strict set of things you can do. Very strict set of opcodes, and even adding one is like a really, really difficult thing to convince people of. And then there's always like the Bitcoin knots people who are like, I'm not going to run anything that does anything except for send money, and like I'm never gonna like even if you're sending money to like a staking service or not a staking a gambling service, like I'm going to ignore your transaction and stuff like that. So it's very, very difficult to get Bitcoiners to agree on anything.
I mean, by design, the only problem was that Bitcoin didn't have enough features before it ossified.
Right. Yeah.
Dang. Well, that's super interesting. Every week I learn about another opportunity for builders over here at Quai Network. Sounds like, SOAP is continuing that, culture over here at Quai Network, if you will. Always building things that change the meta and create additional opportunities for more to come in and fill some of those gaps. So interesting. We'll see how that one plays out over the long run. We're a little over time here, but we had a few more questions trickle in. And I didn't see any over on X. So you guys on X are slacking a little bit, but I might ask. Actually, these two are kind of one and the same, but we'll just shoot it. All right. What limits exist to prevent a single SOAP category from becoming too powerful? And how could mercenary miners impact the network? And why might the incentive to be mercenary be small? Why might
limit their protocol enforce?
Mercenary, hold on. Mercenary miners don't matter, first off. Right? Like, presently, mercenary miners mine Quai and they sell all of it. Right? In the case of SOAP, they sell all of it and then they give us the equivalent amount of subsidy token to buy it all back. So, like, the concept of being a mercenary miner doesn't matter in the context of SOAP.
Right.
In terms of limiting the amount of hash rate, there's going to be prescriptions on how many shares can be produced by each type of hash. Initially, it might be static, but it will potentially change over time, or we might just make it dynamic. We don't know like which one we're going to do yet. Right now, it's just static. If we have like the bandwidth to make it dynamic, we may. But basically, the point of the share allocations is you want them to be done such that they give you the greatest diversity of security amongst the different algos, while simultaneously making sure that we're maximizing the amount of subsidy that we can be brought back into Quai. So the reason that you would change the amounts over time is to make sure that you're maximizing that subsidy. But there's a limit of number of shares per block. So initially it'll be set to 3 of each of the algos.
Nice. Yep. Okay. Yeah, we've covered that in the past. Really, the incentive is to only submit the number of work shares that you can get maximally paid for.
Yeah, so like in expectation, if you include the block, there's 9 shares. So right, there's independent controllers on each of the share types. So you'll be able to, in a given block, you can submit up to 16 work shares currently. What we're basically saying is that you're going to be able to produce as the Kapow shares will still be under that limit. Like you could have up to 16 Kapow shares per block. But the Bitcoin and SHA ones, we're targeting 3 per block and maximum 6 to sort of deal with the statistical nature of it. So you can submit up to 6 shares of Scriptar SHA to the block in any given block, but the controller will continue to adjust to try to get it to 3. So if you're submitting 6, the difficulty will go up until like the average over time is 3. And conversely, if it's less than 3, the difficulty will go down until it becomes 3.
There you go.
Yep.
Nice. And then finally, SOAP allows us to not have to worry about mercenary miners anymore. Love it.
Yeah, I mean, all mining is 0, like on the cell pressure every day, like it goes to 0. So it doesn't matter like what type of miner you are, your net effect on the system at worst case is 0.
Nice. Rock on, guys. Well, We're definitely over time. Really appreciate everybody tuning in and asking the questions. Happy Monday. This is always a good way to kickstart the Monday, diving into everything we're building over here on Quai Network. Hope you all had a great weekend. We'll be chatting more with Dr. K on Wednesday. Before I officially wrap up, any final thoughts, Jonathan, Dr. K?
Yeah, thank you guys for tuning in. Thanks for the questions. Thank you for listening, and I hope it was helpful for you guys. And we'll see you next time.
Yeah, sorry for jumping in there, Josh.
You're good. I mean, you're better at answering these questions than I am, so I'm always happy to have you answer them.
Cool. Yeah, thanks everyone for coming. Hard at work at SOAP here. Jonathan is going to get us a Bitcoin Cash block today. Hopefully with an ASIC. So we're just moving down the list, and then we'll get a script one tomorrow, and we're hoping to have kind of like a dev pool up end of this week at least for the pools to start their integration into Kapow. Yeah, it's underway, and then we have to do a little bit more consensus testing before we'll get the testnet up. But it's probably going to be a week after the we get the DevNet pool like to the pool operators. So yeah, but we're on track, it seems, for probably the first/second week of November.
Heck yeah. Rock on. Well, guys, I think that wraps it up for today. We'll have more time with Dr. K and team on Wednesday. Same time, same place. If you're hanging out with us on X, definitely hop into the Discord server so you can join in on the chat. Love hanging out with our community over here. It's always a good time. Love the questions. Really appreciate everybody for tuning in and asking their questions. Many thanks to Jonathan and Dr. K for answering all these questions. So you're still early over here at Quai Network, folks. Definitely give the Twitter account a follow. If you're new around here, keep your eyes peeled for more updates on Project SOAP. We'll be live streaming some more building on Quai later this week, tomorrow evening. We also have our What Did You Do Last Week space tomorrow as well, where you can hear from some of the other builders on Quai Network, get updates from everything everybody's building over here on the world's first globally decentralized energy dollar. Love to see it. If you need to get your hands on some Quai, if you join the Discord and you're like, hey, how do we join the Quai Nation? All you need is one Quai and a Pelagus wallet. Go sign up over at Kipper to Money. Get yourself some Quai and engage with all the content and earn even more Quai. I put out a tweet earlier today. The community's just having a ton of fun, inviting new people into the space and sharing the love on X just by sending them some Quai directly on X. So if you haven't yet, go check out kipper.money at kippermoney over here on X, and go earn some Quai, guys. If you need even more than that, you can trade on Mexi, Gate.io, and LBank, and a few others. You can swap on Let's Exchange. And we are also looking forward to an integration with Wormhole. That is coming soon. And we're on the Kraken roadmap as well. So you're still early over here at Quai Network. Definitely give this account a follow. Check it out. I will see you guys in this space next week. Otherwise, we'll catch you all on Tuesday. And keep your eyes peeled for some more updates. We got some more spaces with partners lined up along the way. So I'll catch you guys on the next one. Thanks, everybody.